Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Teaching Tech Tuesday. Let's look at another actionable signal in the Ichimoku cloud system. We just so happen to be at a specific period of time on the daily time frame where we are seeing these signals kind of back to back to back. They do kind of happen in order, right? So if you're watching this like a year from now, you will see potentially heavy bullish continuation off of this cross. It always kind of looks like nothing in the moment. It doesn't really look like anything super special. But part of the magic here is that it happens so infrequently because, again, with crypto, I'm using 2061, 2030. With legacy, I'm doubling the default. So I purposefully am eliminating most of the noise, most of the crosses. You're getting slower signals, and those signals are extremely impactful. Keep in mind the higher time frame always wins. Always keep in mind the cloud checklist. Where is price relative to the cloud? Is the cloud bullish or bearish? What is the TK cross telling you? That's what I'm going to talk about today. And then lagging span, I don't use ever, so I just don't talk about it. But part of the reason I don't use the lagging span is because my settings are what they are. I'm already eliminating noise. I'm already using slower settings. I don't need another piece of the checklist that I've deemed not as useful. Just because it feels like my noise to signal ratio is dialed in enough. I don't need another piece of the checklist. So when going long or short, you always want congruent signals off the cloud. If you're below the cloud, if you've got a bearish TK cross, which I'll talk about in a second, that is a short signal 10 out of 10, especially if you catch it on the day or on the period when it happens. Throughout that duration, the cloud is telling you, you should only be looking for shorts, dear trader. Okay, we're in the opposite position here now. We have a TK recross with price above cloud, which is a specific actionable signal here. I'll show you the receipts as to why here in a second. But this is the cloud telling you, yes, we know you just closed your long, or maybe you closed it and reopened a couple times. But the cloud is telling you momentum is potentially coming back. Consolidation has probably occurred, likely occurred. There was probably a preceding chart pattern. Almost always there will be, or you are in some sort of channel. Those are kind of the two options for success on these crosses. Either you have a reversal pattern, inverted head and shoulders, Adam and Eve, W double bottom, ascending triangle, or you've been in a consolidation pattern for months. Like we'll take a look at Link, what happened there with those signals. But the cloud is always trying to tell you, trying to nudge you, right? Get back in, or get out here. Hey, definitely get out here. Hey, I told you to get out here, right? This would be a signal for the long side in the current environment, February 13th, 2024, telling you it is safe to get back in. Momentum is back. Ideally, you want these closer to price. Ideally, you don't want price already running away from you, kind of as it is here. But the idea behind the signal is the same. It is always telling you, if there's a trend, what is the strength of that trend? What is the status of that trend relative to being overbought, oversold? And has the trend just started, or are we 30 weeks into this trend? The next thing that you're looking for, the next actionability item, would be a key June bounce, and I'll talk about what that would look like. We might see that next week. I don't know. It'd be nice for the video series if that's the case, but if not, that's okay. But if you can master this, in my opinion, super basic, and we're talking like 5 types of things you're looking for, a super basic checklist, daily, high time frames always win. Yes, you can look at this in the 4-hour, the 15-minute, or the 30-week. I don't care. It doesn't matter. But typically higher time frames always win, and you want to dial in the time frames a little bit. If the market's kind of moving around the 8-hour, if you feel like the 8-hour is where the signals are showing up that are actionable, percentage-wise, you're getting good moves there off of the 8-hour, then move to the 8-hour, right? But if you're trading an altcoin and all you have is the hourly, that's tough because you're not really getting the best signals anyway, and you just need more time. I know a lot of people, they always want to trade the newest airdrop or the newest thing that listed. The cloud generally, it's going to be helpful. It's going to work, but it's not going to be as impactful as it would be if it had a year's worth of data. So let's look at some charts. Let's look at some back testing, forward testing. Let's look at where we're at now. If you're unfamiliar with the cloud, blue line here is the Tenkin. The red line is the Kijun, and I'm sure I'm butchering the pronunciations of those. The cloud itself is this green section here. This is a bullish cloud. This is a bearish cloud down here. And you can see since 28, we transitioned from below the cloud, bearish TK cross, bearish cloud to above the cloud, bullish TK cross. Okay. So the cloud is still bullish. That says look for longs. Price is still above the cloud. That also is telling you look for longs. The intra-trend signal, the TK cross here, at around 44-ish, crossed bearish. Now you can always use a trailing stop system. Before that, I talk about Williams fractals. That's for a different video. But many people will say, you know, these signals are too slow, or these signals aren't as profitable as XYZ. Sometimes that's correct. Sometimes it's noisy and it's not great, but it still gets you in at 28 and got you out just trading the TK cross, not worrying about trailing stop loss, got you out at 44. So currently the intra-trend signal on the daily crossed from telling you to close your long here to telling you to reopen your long all the way up here, right? And again, yes, I know it's overbought. This move happened super quick. It's overextended. I'm not going to disagree with any of that. But what this means for the upcoming trend is likely significant bullish continuation. Ideally, throughout any trend, you get pretty significant pullbacks to this red line, the Kijun. We didn't really see that the entire time until the very end. You could argue it got close, but by the time in January, whenever this was, you know, you're missing 3 months of up. So what you really want to see here is an early Kijun bounce. We'll talk about that when it happens or if it happens. But that would be a retracement all the way to this support line, the red line. Nevertheless, the cloud is telling you, keep looking for longs. Longs are still great. Longs are really good. You've reconsolidated. You've formed this inverted head and shoulders, which already played out exactly to the levels you'd expect based on the measured move. And it's telling you you're just as bullish here as you were at the 28K break. As far as the cloud is concerned, for the trend, it's telling you again, nudging you, hey, get in. Hey, stay in. Hey, stop shorting. Okay. That's what it's telling you to do. And you really only understand what the signal says if you've traded through these signals or if you know what these signals look like. I know there's significant buy-in with this stuff. I don't care what settings you use. I don't care if you don't use the cloud at all, but I think it's super helpful. If we look at some historic crosses for Bitcoin on the daily, these don't happen every day, okay? Bullish TK recross with price above cloud. And the reason they don't happen all the time is because you already would have had to have had a bullish push, a bullish momentum. Even though these signals weren't very clean on the daily, you know, I would argue, you know, you're kind of getting in semi-late, you know, this is okay. This goes nowhere, right? But before that, you did have preceding chart patterns. You did have a megaphone. You did have a falling wedge that sort of tip you off on the bias where this is likely to move. It helps that we got some news catalysts. You know, the cloud doesn't know that. The candlesticks don't know that, right? But both of these times it's telling you, get in, get in, get in. When it drops below the cloud like this, it's telling you to get out, right? So there can be periods throughout history where you will notice, yeah, on the daily with these settings, it's fairly noisy. These settings aren't perfect. You know, nothing is a guarantee except death and taxes. But it tried to keep you in, and then it got you back in again at 28 before taking off, right? Something else you'll notice for this period of time, we were in a trend channel. And you'll notice when we're in a channel, that's typically when we've seen the noisiest signals like this. So maybe not the best examples, maybe weak, maybe not what you'd expect, right? We could see this here. We could see this exact thing. We get a bullish TK cross. It's telling you, yeah, here's an opportunity, right? It's not a guarantee. It's a suggestion. It's saying this is where we have seen bullish continuation with an intra-trend signal like this and a TK cross that looks like this. We saw another daily TK recross with price above cloud in 2021. Once again, had a preceding bull move, retraced quite a bit, regained momentum, and you get your TK crisscross. This was a tradable setup. It was a tradable signal. It ended up working out to some extent, right? You got a little bit out of this trade. There was some meat on the bone there. It doesn't know that we're at pre-halving. It doesn't know that SPF is selling user funds, right? It doesn't know that the markets are about to explode because of rates or Terra or Celsius, right? It doesn't care about any of that. But what it is saying is you have sufficiently regained momentum and it is giving you permission to look for longs once again. If anything, this started off as an inverted head and shoulders and then didn't quite get the right shoulder. You know, it just lifted off. But with a trailing stop loss or a stop loss on this, this would have been a very, very nice trade. So again, it's not always about expecting a grand slam, okay? Sometimes it's a double, sometimes you strike out. But if you're looking for your pitch, right, you're at the plate, you're looking for your pitch. This is the time on the long side to shoot your shot. If we dial it back all the way to post-COVID, post-halving, halving was about here, right, somewhere in here. Once again, the cloud is telling you, nudging you repeatedly, yes, we are in this broader consolidation. Yes, the world just exploded. Yes, we're in lockdowns. Yes, we have stimmies. Yes, everybody's miserable. But it's telling you repeatedly, get back in, stay in. Bullish TK cross with the breakout, bearish cross, bullish recross, which kind of fizzled, right? Technically, again, unless you're using trailing stop losses on that, not a great trade. You get a little bit out of that. But it's the next one after the consolidation where the rest is history, right? We go to 60 from 10. Now, do I think we're going to go to 100 from 48 here? No, but I didn't think we were going to 60 there either. And the cloud doesn't know that. It's just telling you, look, this is the time to get in, stay in. As far as the pattern is concerned, you can say it was a throwback to the neckline of the head and shoulders. That's appropriate as well, but all of it was bullish, stayed bullish the whole time. If we look at what we really want in an extended trend, it's this very thing. I think of it as, the Hot Wheels, the tiny cars with the acceleration gates, where to regain that momentum as they're going through all the loops in the course, right? You need these pullbacks. You need these signals throughout any trend that kind of lets people get in and out. So in 2016 and 2017, we saw 4 TK recrosses in kind of rapid succession, right? We don't see these again every day, right? But if we are seeing these, you know that we've held in a trend for an extended period of time. We've attempted to break down and didn't. That's why they're the most bullish or bearish signal, because there was such a heavy emphasis on trend continuation. We had a few in 2015 and 2016. Again, we were in a period of massive consolidation. These end up largely going nowhere, right? So you have to sort of read the room. Are we in this 250-day consolidation period or not? There's actually another one here I didn't even circle. But as long as the TK recrosses are still occurring, it's telling you get in, get in, get in, right? Look how early this is telling you to get in, months before the breakout. Having was somewhere in here, I think, 2016. But it's not going to leave without you. It's telling you explicitly, get in, get in, get in, stay in, don't get out, don't get out, don't get out. And then again, with trailing stop losses, you can work something out a little higher if you're waiting for the TK cross. This is post Bitfinex hack. But I think you get the point. This gives you a massive trade at that time when everybody thought this was going to zero. Everybody was shorting this. Turned out to be a great trade. Let's look at a random chart with a bunch of trading history on it to see how noisy this can get. Here's Ripple. Okay, Ripple tends to move straight up, straight down, pretty far below the cloud here, unlike most everything else at the moment. Okay, so it's definitely telling you to stay bearish, okay? In mid-2023, you had a series of TK crisscrosses. This one is hard to really count because, again, it literally went straight up in one day. There is evidence here of a triangle consolidation. There's evidence here of a little mini inverted head and shoulders. So there are other things that are trying to keep you in, but the cloud not that effective for markets that historically haven't really trended generally, right? There was a period of time when Ripple did trend very early on. I'll get to that in a second. Those TK recrosses worked great. Okay, here's an example in 2021. Again, you consolidated. There's some sort of pattern here. This is, maybe call it inverted head and shoulders, whatever you want to think of it as. It did go again. It did go again before, preceding having that TK cross. There was another opportunity for a move higher in late 2021, but much like the rest of the market, it went lower. So you always need stop losses on this. Again, it's not a guarantee, but it is a highly, highly actionable signal. If we look at all the way back 2017 now, once again, just looking at the TK cross recrosses that had occurred in pretty quick succession here, it's telling you over and over again, right? I hope the point is across, even though this stuff is kind of trash on this, like how bad could it get, right? Well, this is an example. It's still telling you, get in, stay in. There's some wick to like 0 here on Binance. I don't even know what that's about. There's a TK recross all the way back here. You're in this trend channel for a year. It's not pretty. It's ugly, right? Cloud doesn't do great with that, but even knowing that, it caught the meat of these moves. You could argue there's another TK recross here, which I didn't even circle, but even when it's kind of trash, it still works out. Here's Doge. Guess where we saw bullish TK recrosses on Doge on the daily? This is it. You're looking at it. 2020 and 2021. When were the biggest moves in Doge? 2020 and 2021. I mean, this is a massive move. I'm sure they're similar on a low time frame for bonk. You know, anything that's had time to consolidate, like Doge has, will have a series of these crosses. I can't remember if it's here. It's hard to see if it was in 2020 or 2021, but one of these was an inverted head and shoulders. I think this might have been maybe like an Adam and Eve or something. But once again, even when it looks not great, right, it's still helping you out. Here's one that just happened a couple days ago that I missed, that I should have traded but just didn't. If you look at Link in the recent past, in September 2023, you got a bullish TK cross the price above cloud. Great, right? But you already kind of saw that. It was still in the range. Maybe you argue cup and handle here or something, inverted head and shoulders again. Like there's something trying to bottom, but it tried to bottom for like a year. So like, you know, the expectations are low. But nevertheless, the cloud is telling you, if it's going to do it, this is the time. This is one time, right? It tried to in 2023, earlier in the year, just didn't happen. So just as we had these series of crisscrosses on the TK lines, we had that again recently, right? Get you in at basically what, 15? And again, it's no guarantee. It's just saying, yeah, this is the time to be long again. If you're not, when I'm in a known extended consolidation like this, I typically bump it up on the time frames, 2-day, 3-day, weekly. Typically, you'll get cleaner signals there. But even on the daily, you know, it's telling you what you need to be doing, right? It was giving you all the signals. Everything on the checklist was a go, and it told you exactly where to get back in. If we dial it back on Link all the way back 2020, 2021, again in 2021, you'll notice failed continuation, basically, right? We consolidated market-wide everything. It was just done. It was just exhausted. Didn't continue. Early in 2021, pretty good trade, right? Bullish TK recross. And then between 2019 and 2020, again, you're in this massive kind of trend channel, I guess you'd call it, consolidation channel. Eventually it gets there, eventually, and you get a nice move. So I would never say, oh, this thing's in a channel. It's been in a channel for months. This can't happen. I'm just going to ignore it. It's always worth taking that trade from a signal perspective. Let's look at Solana. Solana's had some really clean signals on the daily, which I largely ignored because I'm anti-altcoin in 2021. Centralized, attached to SAM. You know, again, the cloud doesn't know that. I should have known better. I just didn't trade it. But if we look at 2021 on this cloud signals, damn near perfect. Bullish TK cross, bullish Kumo breakout. Candlesticks intraday volatility is all over the place, but the cloud still picked it up. Okay, and it picked it up again later that year. Now in this trend, there really was not any bullish TK recrosses with price above cloud. There were checklist re-entries, right? You had a bullish TK cross first, and then you had the breakout. You know, maybe this was about the same time, but this is textbook 101 cloud, right? This is why we cloud right here. But the train isn't leaving the station without you as long as you're watching these on the daily. Told you to get in at like 2 and get out at like 25, okay? So pretty great trades. If we look at now where we are, again, dialing it back to 2023, pretty massive mega consolidation the entire year. Now, you don't know that mid-early year that this is going to go on, right? Doesn't matter. That's the argument here. Just, you take the long anyway. If it doesn't work out, you're out, right? It's not 100% hit rate. It's not always going to give you a trade, but when it gives you the trade, the moves are more than enough to make up for getting stopped out. And once again, the train doesn't leave the station without you at 25 to 100, as long as you're paying attention to the daily signals. There was also an inverted head and shoulders down here. There was all sorts of diags. This was trying to bottom for a long time. The cloud doesn't know everybody and their mother's force selling this. It doesn't know that Robinhood is force selling this, right? It doesn't care. It's just telling you trend wise, yeah, now's a good time. So you can see you had another sort of failure here, failure to launch, but it does a pretty good job of telling you what to do. So up here again with Solana, previously we had this inverted head and shoulders, and now you have a bullish TK cross. Does this guarantee a 300% move, 500, 900? No. It just says get long, stay long. For me, that's typically on spot. Leverage kind of has to be a specific situation with chart patterns or a strong retracement, but this is very likely to be a continuation attempt up here. Let's look at some legacy stuff. Let's look at DXY. Let's, look at everything, anything you trade, all time frames. You have to have the buy-in yourself so that when you see these signals, again, another one I missed, NVDA. Not only did I miss the horizontal resistance, this consolidation, but I missed the daily TK cross. That gets you in at 450, 460. What an insane trade. Again, no guarantee of continuation. I did have a trade in here from, I forget exactly where, but it was like 245 to 400 or something. But the easy things you don't want to miss are these signals, right? So here you have this mess of a consolidation that tried to break down and didn't, and regained momentum. Maybe there was a little cup and handle up here. But once again, the cloud knew. We dial it back to early 2023. What do we have here? Well, price is kind of in and out of the daily cloud. By the way, these are the legacy settings. Price is kind of in and out of the daily cloud. Kind of a mess. If you know chart patterns, you know that this is an inverted head and shoulders all day long. Not just because it worked out, but this is what they look like. They're not always perfect. Sometimes they have multiple left shoulders, multiple right shoulders. Sometimes they have cousins, sisters, and brothers with shoulders. Okay, but this is the expectation. As long as you don't make a lower low below that right shoulder, there's a high likelihood you're going to have a bullish reversal on your hands. So this was a multi-month inverted head and shoulders with a bullish Kumo breakout with a delayed bullish TK recross with price above cloud, right? So like it tried to break out, failed, did it again. So again, it's telling you, get in here. Okay, maybe stop losses, maybe we're below the cloud, you get out, fine. But it's telling you to get back in again, right? And then it was lights out the whole time. Never get your Kijun bounce. You just hold the Tenkin the entire time till the very end. And then at that point, it ended up working out if you're getting in at 400, but that's not somewhere you want to live. You want to take the easy trade, the easy signals with the consolidation, with the cloud signals. If we dial it back a little bit further on NVIDIA, just because I was on this chart, 2019, 2020, 2021, again, there were a series of TK recrosses with price above cloud telling you to get back in, stay in, look for longs, don't get out. And in 2019, this was coming off of, again, we'll call it an ascending triangle or a consolidation period that was quite noisy at the very beginning. But I wouldn't get discouraged, even if, looking at current crypto stuff, if we get some noise up here over the next month and a half, and you get that signal to go long again, yeah, you take that signal because historically, those signals have been very, very strong. Dixie on the daily at the moment has the bullish TK cross, price above cloud, doesn't have a bullish cloud yet, which is good for us. We don't want this to be bullish, right? We are inverse DXY. One thing you'll notice in 2021 and 2022, guess what we had? Two bullish TK recrosses, right? And look where this went. This thing was a bulldozer. Does it know the Fed is raising? No. Does it know everything else is going on in the world with inflation? No. But it was pretty clear, based on the trend of the DXY on the cloud, where this was headed. It was strong almost the entire time, and that was very bad news for crypto. So we certainly don't want to see that. Again, we dial it back on the DXY 2018, 2019. Again, you're getting several reentry signals preceded by bottom reversal patterns. So depending on how you want to measure these, some of them kind of go nowhere, but it's still telling you, get in, get in, get in, get in. I think these are tradable. They're not as impressive, as 2021 and 2022, but they're still very tradable. Dialing back a little further, again, you'll see this stuff. Sometimes it's once a year. Sometimes it's once a quarter. Most of the time, it's very infrequent. You see this hardly ever on the bullish side. We saw one in 2015, one in 2016, but again, both times it's trying to tell you, get back in, stay in, don't get out. And then if we dial it all the way back to 2014, there was one cross, looked like nothing, right? Again, this is coming off of a channel. You never got your Kijun bounce the entire time with these settings, So there's some arguments to be made that you do want to bid this blue line, the Tenkin. But this cross brought Dixie from 80 to 100. It doesn't know that. It doesn't know that that's going to happen. but it's important to really watch these signals on the daily. You know when they're about to occur, like we did on Bitcoin, on Solana, on a few other charts. I think AVAX, DOT, there's a lot of these signals on daily clouds right now. And there was a chart pattern before they played out. So all this stuff is as you'd expect, right? We haven't seen any failures of this yet. What a failure of this currently would look like is price in the cloud, which would be below the red line, below the Kijun at 43,000. That would be your stop loss. So that does give you a pretty tight, re-entry stop loss at the moment. Over the next week, over the next month, these TK lines are going to move up slowly. Support will move up. And as I've said, in this specific point in time, this is reminiscent of a potential cup and handle, which is when you would see your Kijun bounce potentially with the formation of the handle. So it's an exciting time. We don't get these setups often. So I'm doing these videos that way you can go back and look at what the conditions were, what does the backtesting look like, what is the hit rate. The answer to all that is it doesn't happen often. The hit rate is fairly high. And most importantly, it's not about being right or wrong. It's about taking that asymmetric risk opportunity, because when it is correct, oh boy, is it correct, right? It's like 300 to 1, 200 to 1, 20 to 1, whatever it is on a percentage basis. Highly, highly, highly suggestive of bullish continuation. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.